Today in crypto. The ProShares Bitcoin Strategy Exchange-Traded Fund, ETF, is on track to reach a limit on the number of futures contracts it's allowed after quickly becoming a little too popular. After just a couple of days of trading, the ProShares ETF has reached 1,900 contracts sold for October, and there is a 2,000 front-month limit imposed by the Chicago Mercantile Exchange. Continue reading on Cointelegraph. Top-down governmental responses to innovation have always been questioned by entrepreneurs. Right now in crypto land, as institutional investment flows steadily in decentralized finance, DeFi, use cases and products have continued to flourish over the past 18 months, many crypto companies are begging for further regulatory clarity. The original Australian Senate Select Committee on FinTech and RegTech, chaired by Senator Andrew Bragg, was established in 2019 to strengthen the regulatory environment for fintechs and regtechs in Australia. It would quickly become known as the Bragg Inquiry and is now largely focused on crypto. Generally not regarded for its regulatory progress, Australia's quick pivot to researching and proposing helpful rules for the crypto industry has surprised many. DAO's a company law vehicle stopped debanking of crypto exchanges, rejecting the Financial Action Task Force's FATF travel rule, clearing up the DeFi tax nightmare. Continue reading on Cointelegraph. Open-source blockchain analytics firm Moonstream published a report, which found that around 17% of addresses control more than 80% of all non-fungible tokens, NFTs, on Ethereum. The report was published on October 21 and the analysis was conducted on more than 7 million NFT transactions on the Ethereum blockchain between April 1 and September 25, 2021. Continue reading on Cointelegraph. Rippe chief executive Brad Garlinghouse has been airing his thoughts over the state of the crypto market and regulations, and a grudge over the financial regulators' approach to Ethereum appears to have surfaced. Speaking at the DC FinTech Week virtual conference on Thursday, the Rippe boss declared that Ethereum had been granted a regulatory green light that enabled it to surpass his company's XRP token. Continue reading on Cointelegraph. Blocks DAO LLC has recently announced a new strategic partnership with Humble for the purpose of experimenting with the capabilities and limitations of blockchain technology, bridges, and side chains. Who are Blocks and Humble? Blocks is a growing project that aims to help migrate industries all over the world onto blockchain. The company views this as the best way to improve traditional industries while at the same time, it pushes blockchain adoption and grows its utility. So far, the company has had a blend of blockchain and non-blockchain partnerships, indicating that there is interest among non-blockchain firms, and even entire industries to see the firm's mission come to fruition. Meanwhile, Humble is a project that aims to connect both consumers and merchants to the digital economy, and then connect them with one another. Humble comes as a new digital way to use money, and it is viewed as an early-stage fintech firm. Humble and Blocks' strategic collaboration. As mentioned, the two firms have recently announced a strategic partnership, and they have already started experimenting with the capabilities of the blockchain. The firms are focusing on the use of bridges to increase interoperability in the blockchain sector, something that is key for the arrival of Web 3.0, and side chains, which have become crucial to reducing the gas fees, especially when it comes to the NFT market. NFTs have exploded in 2021, but for the most part, managing them is still too expensive due to low scalability. However, the two companies are confident that experimenting with sidechains can bring forth a solution that will reduce gas fees for NFTs by up to 98%, improve NFT metadata storage across modalities such as video and music, and even create an improved verified by Blocks registry, which would help customers track, verify, and authenticate their NFT holdings all over the world. It is also worth noting that Humble is only the first of numerous companies in the Blocks Builders program. All of the companies from the program will be leveraging the various Blocks Builders modules in order to build better solutions and products with Blocks. What to expect from the partnership? So, what will this partnership actually bring? Well, given that Humble's NFT clients include a lot of professional and even Olympic athletes, as well as musicians. It means that a lot more of them will get an opportunity to launch their own NFT collections in the near future. Furthermore, the partners are also planning on experimenting with Blocks Builder blockchain plugin modules across a variety of modalities. Some examples include payments, real estate on Humble Wallet, ticketing, and alike. In other words, the firms plan to use their partnership to bring more new, innovative, advanced, and practical solutions that will help better the current industries, while simultaneously helping develop the growing NFT market by removing some of the obstacles that are currently still in its way. The modules are already live in Blocks GitHub repository as well for other prospective Blocks builders to look at implementing into their companies. Blocks lead blockchain consultant, Adam Wolf, commented on this issue, noting that every technology cycle has paired consumer packaging companies and the network they run on. With that in mind, the partnership between Humble and Blocks will focus on trying to achieve the same. The goal is to give global consumers a smarter blockchain grid, as well as a simple packaging layer on top of that grid. The partnership will certainly be interesting to follow and see where the joint research and investigation of blockchain's capabilities will lead the two firms, as their discoveries could potentially solve problems in the broader blockchain sector. Continue reading on BTC Peers. Hit the like button and subscribe to the channel.